Stock markets around the world have crashed amid growing fears of another global recession. Asian exchanges followed Wall Street, which shed almost 500 points overnight. The local market has fallen to its lowest level since mid-2009, wiping an estimated $50 billion of company values over the last 2 days. And European markets also fell sharply when they opened a few hours ago. With predictions of more turmoil to come, the Australian government is urging investors to stay calm. Hamish Fitzsimmons reports.
It was another chaotic day in world markets, and Australia was no exception.
What last week looked like a European-specific sovereign debt crisis has now morphed into a global growth crisis, with people really starting to worry about the chance of a recession in the developed world in 2012.
The mood in the local market wasn't helped when the Reserve Bank cut Australia's economic growth forecast from 4.25% to 3.25%. The ASX 200 lost 4% by the end of the day, close to its lowest level since the middle of 2009.
Yeah, this is probably the worst down day in probably 2 years post-GFC, without a doubt. And it's a big day in terms of volume as well, over $9 billion worth of turnover.
The federal government says Australia's situation is vastly different from the US and Europe. The Treasurer has a simple message: don't panic.
Australia has low unemployment, a very strong investment pipeline, very strong financial institutions, and we are located in the right part of the world at the right time.
Today's turmoil started when the Dow Jones closed more than 500 points down, and the feeling in the US is this is far from over.
We're down just over 10% in terms of correction. I don't think it's over yet, though. Certainly 10% is viewed as a correction, there's no doubt. But you can sense, you can feel the tone in the market that it's not over yet, that it could in fact get a little bit worse.
It did. Confidence in European stock markets collapsed over concerns about Spain and Italy's sovereign debt. Those governments have slashed their budgets, but some say that may actually be worsening the prospects for long-term recovery.
What we're seeing, particularly in Europe, is as governments respond to the pressure coming on due to sovereign stress concerns, they're actually starting to tighten fiscal policy, which worsens the outlook for 2012.
Markets in Europe greeted the day by falling more than 3%.
We will have very volatile markets today, definitely, because markets are searching for a solution. They are looking at the policy, but policy is not able to deliver.
And employment figures due from the US aren't expected to provide relief.
Investors are selling ahead of the July jobs report, which many people believe will be a lot weaker than what the consensus is expecting right now at about 90,000 jobs. And I think investors in general are just very worried that we're headed for a recession, and they want to get out while the getting's good.
Investors will no doubt be hoping the weekend might provide some breathing space. Hamish Fitzsimmons, Late Line.